The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. How about you?
Oh, not too bad.
I know I'm like a lot of listeners. We thank you so much for helping us to earn money in the market, and Mr. O'Brien also, and what you all do at TFNN. It is absolutely huge. We appreciate it very much.
Well, I appreciate that comment very much, and I'm sure Tom does too. Thanks very much.
All the best to you and your family, man. I'm telling you, we so appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. It makes my day. Thank you.
Okay, buddy. Take care.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Thursday. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. Give me a call. Let's talk about this market, 877-927-6648. Breakout Investing every day now on TFNN from 3 to 4 Eastern. Appreciate all of you that listen every day. If you can't listen live every day and you miss a show, you could always head over to iTunes and pick up the podcast over there. And don't forget, you can listen to all TFNN programming on your smartphone. Very easy to do. Just open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. If you want to look at charts live right along with me as I'm doing the show, you can do that with Tiger TV. Tiger TV is also viewable on your handheld device. You can also listen at your PC. Open up Tiger TV. The show is carried live on Channel 1, and it is archived on Channel 13. All right, well, we had some mild distribution in the market earlier this week. Good day of gains for stocks here. Let's check in on the NASDAQ Composite, outperforming today, up 44 points, 1.4% to 3137. NASDAQ trying to get back above its 20-day moving average. See, the tech index really has only had two higher volume declines since August 21st. That was sort of the caveat that I gave yesterday and the day before, that the market was looking vulnerable. Price action in Apple, very weak, past a couple of sessions. But all the while, there have only been two higher volume declines in the NASDAQ since August 21st. So when I say higher volume declines, I'm talking about meaningful higher volume declines. It really felt like institutional selling. One thing that's going to stop a market rally in its tracks is repeated signs of institutional selling, repeated higher volume declines. It's not going to take one day, it's not going to take 2 days, it's not going to take 3 days to kill a rally. It usually takes around 4 or 5, maybe even a little bit more than that, especially when you start to see them cluster. And, we're just not seeing that in the market. And that's a big reason why I have, been sitting tight with the Ultimate Growth Stocks model portfolio. I actually added a new name today that is working nicely so far. If you want to, see what the model portfolio looks like, see which stocks I own, you can do that right on the homepage of TFNN.com. 30 days free of Ultimate Growth Stocks. You can just click on the Newsletters tab right on the homepage, then click Investment Newsletters. You get all the information right there, and you'll also see me in other areas on the homepage as well. So 30 days free of Ultimate Growth Stocks. Feel like the model portfolio is well positioned here. Are we seeing a day of outright accumulation in the major averages today? Well, unfortunately, far from it. But there's really not a day that goes by where I can't complain one way or another about volume, whether it's in an individual stock or an ETF or in the major averages themselves. The NASDAQ had a distribution day in the NASDAQ earlier this week on Tuesday. Right now, volume on the NASDAQ is tracking about 10% lower than what we saw yesterday. So we had just over 1.7 billion shares on the NASDAQ yesterday. Volume stays where it is. We're probably going to be around 1.5 billion today. So it looks like a lower volume rally taking shape here. Market isn't out of the woods yet, but again, we're only about 2% off the recent highs, and it's still possible that the Nasdaq could ultimately pay a visit to its 50-day moving average down here at 30.49. We'll see what happens. Volume on the New York Stock Exchange. Let's check in on the S&P 500 here. Done looking at the Nasdaq. The S&P 500 also sitting near its session high, up 15 points now, a little better than 1% to 1448. It is still holding above its 50-day moving average here at 1411. Volume on the New York Stock Exchange yesterday, 735 million shares. If volume stays where it is here, we'll probably end up doing in the neighborhood of 575 million, maybe 600 million. So not much juice behind the gains today, but a lot of stocks out there that have been holding up pretty well are outperforming today, no question about it. Let's check in on shares of Apple. Apple was looking a little bit dangerous over the past couple of days here. Never really sure what an initial pop of selling is going to do to a stock, but let's take a look at Apple with the 10-day, 20-day, and 50-day moving average. I see it's trying to get back above its 20-day moving average today, down sharply for 3 straight days, Monday, Tuesday, and Wednesday, headed into today, but it is up $14.95 today, 2.25% to 680.13. So key support right now for Apple, definitely the 50-day moving average at around 648. Some headlines the market is dealing with today. Fairly positive headlines out of Europe. Greece's coalition government agreed in principle to deficit cuts that the country's international lenders are asking for. Probably the bigger story, though, Spain came out with its 2013 budget. Its Deputy Prime Minister, Soraya Sáenz de Santa Maria, said today the country's budget for 2013 next year would focus on spending cuts rather than tax hikes, and that the government actually would pass 43 new laws to reform the economy over the next 6 months. The market takes that to mean that Spain is serious about fixing their economic woes. We'll see how it plays out. Positive reaction for the U.S. major averages so far. Spain's Prime Minister has pledged to cut the 2013 budget deficit to 4.5% of gross domestic product. In 2011, it was 9%. So a lot of talk out of Spain. Let's see if they can do it. There's also been a lot of talk out of Greece as well, but that hasn't fully gone as expected up to this point. Third quarter earnings season approaching quickly. Companies will close their books at the end of the month here, September 30th. We'll see earnings reports start to roll in mid-late October. Right now, profit at S&P 500 firms overall expected to fall 2.7% from a year ago. Some bright spots should be in the financial sector, with earnings up 9.9% from a year ago. Weak spots in the coming quarter: energy down 21.4%, materials down 20.2%. Let's see how the financials are faring here today. Nothing special. The XLF is up 1.2%, mostly in line with the market, to 1568. Let me see if I have a different view here under the financials. There it is, financial select sector. Yeah, this is the weekly chart, still holding above its 10-week moving average. 1529 should be a pretty decent support here. We'll see if the financials can come back to life here. XLF technically still looks pretty solid, as do a lot of other growth stocks out there. So that is the one encouraging thing about this market, and what I've been talking about pretty much all this week, that it's easy to get nervous about the market. It's easy to say that the market is ready to come in, but you really not only look at price and volume in the major averages, but look at your own stocks. How are they acting? Are they breaking down in heavy volume, or are they holding above support? And the vast majority of them are holding above support. Now, we looked at shares of Mellanox, MLNX. This is this Israel-based chip designer. Still trading below its 50-day moving average here. This is a stock that looks to be breaking down here. Still not interested in buying Mellanox, even though it has a lot of qualities I like to see in a stock. It is outperforming today, up 3.5% to 104.03, but a lot of sellers have been in this stock over the past few weeks. It is still trading below support here. So Mellanox is one of the few. There have been others too. There's SourceFire, a stock that I was watching for a potential breakout over 58. That is not looking likely at this point. Another stock that recently broke below its 50-day moving average earlier this week. Trading at 49.78 right now, up 2.2%. But we're going to go over some other, some good-looking charts a little bit later in the show. But let's talk about some economic data. First of all, the American Association of Individual Investor Sentiment Survey came out today that showed bearish sentiment rose to its highest level since July 26th. Earlier this year. So when you have a lot of bears out there, sometimes the market can be counterintuitive. The more bears you have with the crowd leading one way, sometimes the market can just keep going higher. So that is actually good news for the bulls to see bearish sentiment according to the AAII at its highest level since late July. Economic data earlier today, lots of data points. Weekly jobless claims down 26,000 to 359,000. That was a bigger than expected drop, so good news there. August durable goods orders, worse than expected, down 13.2%. That was well above expectations for a drop of 5%. Ex-transportation, also worse than expected, down 1.6% compared to estimates of a 0.2% decline. And third quarter gross domestic product, worse than expected, up 1.3% versus an estimate of 1.7%. So all in all, not too bad a market reaction, as the market right now seems to be focused more on what's going on in Europe than some of the economic data points seen today. Tomorrow, personal income and spending for August. We'll get the Chicago Purchasing Managers Index for September and the final reading on consumer confidence for the month of September from the University of Michigan. IPO news has been pretty quiet lately, but Amira Nature Foods, ANFI. ANFI is the ticker symbol there. Not trading yet, but the company did announce terms for its IPO earlier today. Amira Nature Foods is a distributor of packaged Indian basmati rice and snacks. It's based in Dubai. The company plans to raise $126 million by offering 9 million shares at a price range of 13 to 15. So keep an eye out for that one. And then earlier in the week, or maybe even last week, Dave & Buster's Entertainment, that's going to trade under the ticker symbol PLAY. Have never been to a Dave & Buster's. I know they have some out here in Southern California, but I know the kids love them. They operate 59 casual dining restaurants with large arcade areas where you can play games. They announced terms for its IPO recently, based in Dallas, Texas. The company plans to raise $100 million by offering 7.7 million shares at a price range of 12 to 14. And then last week, LifeLock, L-O-C-K. You've probably seen their ads. They're an online provider of identity theft protection services. They recently announced terms for their IPO as well. The company plans to raise $165 million by offering 15.7 million shares at a price range of $9.50 to $11.50. So Lock, Play, and ANFI set to come public soon. Stick with me, folks. Breakout Investing on TFNN. We will be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to Breakout Investing, everyone. The CBOE Volatility Index, not surprising, taking another big hit today. It had been in rally mode for 3 straight sessions as the major averages were bleeding. The VIX right now down a little more than 11% to 1493. Reclaimed its 50-day moving average yesterday, back below it today, trading near its session low. So the market bulls want this VIX to, continue to look weak technically. It also wants the dollar, of course, to be weak. Right now, the U.S. dollar trading at 79.52, down 37 ticks. So you do have a weak dollar today. Let's take a look at a chart of the greenback index here. And again, this is based on Wednesday's close, as it were. So going into today, the dollar, like the VIX, was working on a 3-session winning streak. It is lower today, closed Wednesday at 79.89, right now at 79.52. The yield on the 10-year note up a little bit today as money comes out of the bond market and flows into stocks. The 10-year yield right now 1.64%, give or take, and the 30-year at 2.82%. Let's take a look at the TLT. This is an ETF that basically tracks the long end. Here you go again. Look at this resistance at the 50-day moving average. I like the weak technical picture here. This is not a strong technical setup right now. You can see the TLT tried to regain the 50-day moving average back in late August, early September. It was turned away. Tried to retake the line yesterday. Closed right at it. It's being turned away here. So entirely possible that this 50-day moving average could be a significant resistance level for the TLT for some time. So TLT still looks weak here technically. That if money continues to come out of the bond market, yields push higher. No reason to think why it couldn't continue to come into the market here. Crude oil today up big. Remember when the market used to be, the market always wanted lower oil prices. Now oil's going up and the market's going up. I think with oil, going up, the market's perception is that, hey, this economy isn't as bad as we think, and demand is going to be okay after all going forward. But oil up pretty nicely today, up 2.1% to $91.85 a barrel. Gold. Good day for gold as the dollar weakens, up $26.90, 1.5% to $1,780.50 an ounce. I think that is close to a 7-month high for gold. Let's check the GLD here. We'll start with the daily chart first for the Spider Gold Trust. You can see it's still showing relative price strength here. It's up 1.6% today to 172.48, and we'll check a weekly chart for the Spider Gold Trust as well. And we still see a compelling technical picture here. The GLD is working on what could end up being 6 straight weekly price gains, but still has this 174 level to contend with over here. So if this dollar continues weak, not out of the question that you could see a bona fide technical breakout for the GLD. It's just in a nice cup-shaped pattern here. Again, as a stock or ETF builds the right side of a base, it's not uncommon to see a little bit of a shakeout here. Hasn't happened yet. Looked like it was going to happen, but GLD still showing relative price strength. If it doesn't build the handle area, you don't see a little shakeout, a breakout over 174 with volume would be bullish. So that's a look at the GLD. Let's take a look at silver too. I don't have a close on silver, but let's see here. Well, we'll pull up the SLV. I thought I saved a weekly chart for silver, but I guess not. SLV, similar technical setup here, just moving tight sideways trading over the past couple of weeks. Its technical picture still looks pretty strong here. This is a weekly chart, so SLV right now at 33.62 for the week. It's up about 0.4%, but the SLV chart here looks pretty decent as well. Checking some headlines today. Prudential Financial, PRU. That's the ticker symbol there. Prudential Financial is, according to the Wall Street Journal, nearing a deal to acquire Hartford Financial's life insurance unit. Shares of PRU right now up 1.9% to 54.78. Hartford Financial trades under the ticker HIG. And some put the value at Hartford Financial's life insurance unit at around $1 billion. Hedge fund manager John Paulson is a big shareholder at HIG, and he's been putting pressure on the company to enhance shareholder value. So shares of Hartford Financial Services up 3.4% today to $19.31. We'll see how that story plays out. In the meantime, we got another break coming up. We'll be back in about 3 to 4 minutes. 877-927-6648. Give me a call. Let's talk about this market. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act, as space is limited. Sign up today.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Take a look at new issue Kayak Software here. Good, strong technical breakout over $33.95 today. Getting close. It's right at its all-time high of $35.35. Kayak came public earlier this year in July at $26 a share. So you can see a big move for the stock today. Fundamentals pretty good here. They're expected to earn 77 cents this year. They earned 26 cents in 2011, so that's a pretty huge growth. And then they're expected to earn $1.04 a share in 2013, which would be up 35% from the 77 cents expected this year. It's a company that provides online travel offers and services. And, a recent new issue that potentially could be an emerging leader here. So Kayak Software having a solid day, up 8.3% on the day. It is a company that normally trades about 350,000 shares a day. Let's check in and see what the volume. Volume right now about 145,000. So not much volume here. So I did talk about the volume in the market today. Not all that impressive, but listen, I follow price and volume, supply, demand, technical analysis, all that. And like I said, it's been a tricky market over the past few months because these price and volume rules seem to. Listen, you want to see stocks going up in heavy volume. You want to see them coming back in light volume. And you're seeing a lot of low volume moves that are working. You're seeing higher volume declines that just bounce back and the stocks keep going higher. So I'm not saying that the price and volume rules are changing, but it's just a different dynamic these days. And, you can sit on the sidelines and complain about volume, or you just got to take what the market is giving you. So right now, NASDAQ volume tracking about 10% lighter than what we saw yesterday. Good percentage gains for the major averages today, but not much volume in the NASDAQ, not much volume on the New York Stock Exchange either. That's still tracking about 20% lighter than what we saw yesterday. Some other headlines today: Goldman Sachs coming around, and they're starting to like Yahoo a little more. They resumed coverage of Yahoo with a buy rating earlier today, set a 12-month price target of $22 a share. Yahoo benefiting on the news. It is up 3.1% today to $16.09. In earnings news, let's check out THO. Thor Industries. Gaps up today, hits an intraday high of 37.49. It is trading near its low for the day, but still up 5.4% to 36.26. The numbers were pretty good from Thor Industries. This is a RV maker. They also make commercial buses and ambulances. I would think in this economy that RV sales would not be doing all that great, but you know what? Apparently they're doing pretty good, because Thor Industries reported profit of 84 cents a share, up 27% from a year ago. Sales were up 15% year over year to $888.2 million. Both the earnings and sales beat expectations. So nice numbers from Thor Industries, and also nice numbers from Discover Financial Services, ticker DFS. The growth isn't all that great. Earnings up 3% to $1.21 a share. That was better than expected, much better than expected, actually. Sales up 6% to $2.29 billion, but a nice move for Discover Financial Services today, up 7.3% to $39.73. Let's check in on the other credit card companies here. Visa, probably still the leader in the group here, recently trading at $133.78, holding near highs, up 1%, almost 1% on the day. And MasterCard is interesting here because it is actually a stock that is setting up in a big old base. And I'm a little wary of MasterCard, again, because you're kind of looking at bases that are setting up now. And, you had a lot of base breakouts in July and August, and you got to wonder if stocks that still haven't moved yet and are still consolidating gains, still setting up, do they really have the potential to be big market leaders? I suppose MasterCard could be. Fundamentals are still pretty solid at MasterCard. They're looking at a swing point here of around 456, maybe $460 a share. So it looks to be forming a little bit of a handle area. So possibly you could see a breakout at some point in MasterCard. It is up 1.3% today to $451.51. So big base setting up here. Let's see if I have a weekly chart stored for MasterCard. Let's see here. Yeah, I do have the weekly for MasterCard here, and you can see the base that has set up here. Bear with me here as I get Tiger TV squared away. All right, so MasterCard weekly chart. You can see the big base that started here, forming a little handle area here. So yeah, it's not a bad looking setup, but I don't own the stock. I'm not itching to buy it here. Again, I did add one more name to the model portfolio earlier today. I'm still seeing intriguing setups every now and then, so I'll keep an eye on MasterCard and see if it can get anything going here. M&A news. Tempur-Pedic, TPX. This is the acquiring company, and at last check, it was having a pretty good day. Tempur-Pedic up 14.9% to 30.78. News here is that the mattress maker is going to buy Sealy, that's ticker ZZ, for $2.20 a share. The deal is valued at $229 million, but TPX is also taking on quite a bit of debt from Sealy, which brings the total value of the deal to about $1.3 billion. Let's check out shares of ZZ. It had been in rally mode since September 11th. I mean, you have to wonder, did somebody know something here? But a lot of heavy volume gains in Sealy since September 11th. Definitely a stock under accumulation. It's only up 4 cents today to $2.18. But again, the deal values Sealy at $2.20, so a lot of good news got priced in pretty quickly here. A couple of downside movers today. Fuller, HB Fuller, reported earnings. Investors not too happy. Big downdraft for the adhesives company today. It is down 9.3% to 30.27. Breaks below its 50-day moving average with conviction. Would not touch the stock here. The company says it sees a slowdown in the global industrial adhesive markets. The bottom line and top line growth at HB Fuller was pretty darn impressive. Its price action today completely unimpressive. Earnings were up 20% to 53 cents a share. Sales up 38% to just over $500 million. And another big downside move. I shouldn't say another, but another downside move over here. Cepheid, this is a molecular diagnostics company. They warned that third quarter sales will likely come in lower than expected. This looks to be a one-off. The stock is getting hit pretty hard today, down 9.7% to 35.34. Cepheid did stick to its full-year sales forecast of $333 million to $347 million. I think there was a delay in I didn't read the full press release, but it looks just to be kind of a one-off sales warning here. But nonetheless, the stock is getting hit pretty hard today. All right, now let's get into some decent-looking charts here, because I'm still seeing a lot of them. Let's check in on shares of Elizabeth Arden. They, of course, market fragrance, skincare, cosmetic products. This company trades under the ticker RDEN. RDEN. After hitting an intraday high of 47.50, you see a nice flat base forming here. And, good solid breakout over 47. Stock is up 1.1% today to 47.28. So according to the buy rules I follow, this stock is definitely within buying range here. Annual earnings in fiscal 2013, fiscal 2014 expected to rise 20 to 25%. So there does appear to be a fundamental story that's driving the stock's price performance. Elizabeth Arden in a nice technical setup here. And here's a stock that popped up in my screens that I had actually lost track of for a little while, because it had been hit hard by selling. But Fusion IO, this is a company that makes storage memory platforms for enterprise data decentralization. Kind of a mouthful here. But Fusion IO today up 4.7% to 30.56, as the risk on trade is definitely on in spades today. But Fusion IO, another stock that's within range here. The swing point was $30 a share. It is now trading at 30.56, and you do have a fundamental story that is driving growth at Fusion IO as well. It's ticker FIO on the New York Stock Exchange, and we'll take a look at a weekly chart for Fusion IO, and we'll see that this one could be in the early stages of a little base breakout here. The technology is really one of a kind. It is expensive technology, and it's kind of been dragging on the stock. Their latest quarter, the market really liked it. The stock gapped up pretty strongly on August 10th. Revenue was up 49% from a year ago to about $107 million. And but again, the concern that the products that they sell are pricey, and if people are worried about slowdown in corporate spending, a weak economy, this is demand for Fusion IO's products could be a little questionable in coming quarters. But give the stock credit; it has. It's looking a lot better than it did, and again, swing point here of $30 a share, so it still looks to be in buying range to me. Another stock that I lost track of that actually is setting up beautifully here, Tractor Supply. Tractor Supply outperforming nicely today, up 2.7% to $99.87, trading up near its session high. This is a company, a retailer. They operate farm and ranch stores across the U.S., and we'll swing over, take a look at a weekly for Tractor Supply as well. And what do you see here? A beautiful cup with handle base. Nice accumulation in the base here where it jumped off its low, forming a good symmetrical handle area here in light volume. Swing point of 101.28. This is definitely a breakout candidate. Yes, it has made a big run, but don't forget that the stock last year in the summertime reset its base count. See the base right here? See the base right here that formed in March 2011. It got undercut. So a new base formed. It undercut the low of the prior base. And again, if you're watching me in Tiger TV, this is much easier to see. But you do have a base reset with Tractor Supply. So right now, this looks to be a possible second stage breakout taking shape. So let's keep an eye on Tractor Supply for a possible move over its new swing point of 101.28. It's not that far away from it, and fundamentals here are pretty decent as well. Some other movers today. Let's take a look at Rackspace Hosting. That's ticker RAX. This one had been under selling pressure Monday, Tuesday, and Wednesday. It's bouncing back a little bit today. Not real keen on it here. I think this one could use more of a digestion period. Needs to consolidate gains for a little while longer. Up 2.4% today to 65.81, and the weekly chart for Rackspace Hosting shows that it is firming up at its 20-day moving average here. See the 20-day with its 50-day all the way down at 56.05. So I'd be surprised. It would really take the NASDAQ and the major averages in general to really fall apart from here to see Rackspace come all the way back down to its 50-day moving average. But so far holding its 20-day moving average nicely here. Catamaran, CTRX. This is a provider of pharmacy benefit management services. I own a PBM in the Ultimate Growth Stocks model portfolio that has been performing admirably. Catamaran Corporation is another high-quality stock in the group. It is building a nice base here. Underperforming a little bit today, only up 25 cents to 97.96. But a look at its weekly chart, and you actually see a nice base taking shape here. Just, again, another example of a base-building stock. A lot of stocks have been moving in recent weeks. This one has too, but it has not yet broken out. So good fundamentals at Catamaran. And let's also take a look at Akamai. So some decent setups out here. These are all decent setups. Akamai holding gains nicely here. A look at its weekly chart, and you'll see a nice base taking shape here. Hasn't broken out yet, but it has been trading over the past 3-4 weeks, showing some tight weekly closes, firming up at its 10-week moving average here. Akamai is a provider of content delivery, cloud infrastructure services for accelerating and improving various applications over the internet. So Akamai looks interesting here. We'll see if it can eventually break out here, showing constructive technical action. And another name we've been talking about on the show, Commvault Systems, CVLT. We'll end with this one as we head into the final break. Commvault making a nice move today, up 6.3% to 58.54. Another tech name showing strong relative price strength, provider of data and information management software with pretty darn good fundamentals. All right, folks, we'll check on the markets one more time when we come back. We'll be back in about 3 to 4 minutes. You're listening to Breakout Investing on TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. As we head into the close here, let's check in on the major averages. NASDAQ Composite right now holding close to its session high, up 42 points, 1.4% to 31.35. Now, what's encouraging is that for most of the session, NASDAQ volume had been tracking about 10% lighter. Just went over to Investors Business Daily's website, investors.com. Right along the top of the webpage there, you can see how volume is tracking in the major averages from the prior session. And it is, NASDAQ volume is now tracking only about 3% lighter than what we saw yesterday. So looks like we maybe could see 1.7 billion shares. The pace of volume seems to be picking up on the NASDAQ. Still tracking 19% lower on the New York Stock Exchange, the S&P 500. Let's check in on that index as well as we head into the close here. S&P 500 up 13 points, 0.9% to 1446. So decent day for the market. You know, sell signals still not abundant in this market, which is why I think it's still too early to get decidedly bearish here. There's nothing wrong with being cautious, maybe taking some profits in stocks that you're not feeling so sure about. But when I look at my Ultimate Growth Stocks model portfolio, I'm seeing very little in the way of technical damage. So that tells me that I can be a little bit patient here. So again, with 30 days free of Ultimate Growth Stocks. You can check that out right on the homepage of TFNN.com. You'll see me on the homepage there. You can also click on the Newsletters tab and then click on Investment Newsletters. Check out 30 days free of my weekly newsletter. I update every Tuesday, and then I send out email buy alerts, sell alerts, market updates in between. So I try to stay in communication with subscribers as much as possible. And basically the way I go about the market, I call myself a top-down investor, and that is because I pay a lot of attention to what the major averages are doing. I pay attention to price and volume. I try to focus my buys during market uptrends when the market tide is flowing positive. If I start to see higher volume declines, I start to see distribution, signs of institutional selling, start to see leading stocks acting weak, chances are growth stocks in my model portfolio will be acting weak as well. And I'm never afraid to protect capital, never afraid to take profits if I have them, and I'm not afraid to admit when I'm wrong. I will cut losses short if a trade doesn't work out. I, of course, use a combination of fundamental and technical analysis when evaluating a stock. Want to make sure I'm buying a real innovator in an industry group showing nice growth in recent quarters, and then I use daily and weekly charts to help me not only help me when to determine when to buy, but also charts help me when to sell as well. So the fact that most holdings on weekly charts are holding above their 10-week moving averages, I see no reason to be too quick on the trigger. After the close today, let's check in on shares of Research in Motion, RIMM. Not really, don't really think this is a relevant stock in the market these days, but it has come back to life over the past 3 trading sessions, up another 2% today to $7.15 earlier this week at a developers conference in San Jose. CEO Thorsten Heinz boasted that the company now has more than 80 million subscribers. That was up from 78 million that the company reported in late June, but RIM this time around is expected to lose 47 cents a share, with sales down 40% to $2.5 billion. Also, Nike reports after the close. We'll check in on Nike. This stock is looking very vulnerable ahead of earnings. Demand in China still pretty weak. U.S. doing okay. Shares of Nike up 0.6% to 96.08 ahead of earnings after the close. Coming up next, the Tom O'Brien Show from 4 to 6 Eastern. Listen to him. He'll have a lot of good information for you. I'll be back tomorrow, 3 o'clock Eastern, with another edition of Breakout Investing. Have a great day, everyone.